Shubham from Monist View, and today we are going to discuss one key important product, SIP Insure. This is a product which is available in Indian market and offered by few MNC. We will discuss their product as well as we will discuss in-depth analysis of this product. So let's start. So basically, what is a SIP insurance facility? It is an optional facility of a group of life insurance covered provided free of cost by selected AMC to investor who invest via monthly SIPs in predefined system. This feature provides coverage against the uncertainty of a life besides enabling investor to accumulate wealth. Let's take an example. If I take an SIP through this product from, let's say, an AMC X, then I will pay SIP every month and some portion of an insurance will be given to me. So why it is necessary and what is this about SIP insurance? Number one, pre-insurance cover. It gets maximum up to 120 times of a free group life insurance cover your monthly SIP installment amounts. Let's say my SIP insurance under this product is 20,000 per month. So at the end of a 1 year, I will have a 120% of the insurance cover. Second, it is a long-term growth product. Since it is associated with equities, it will give you a very handsome return and has an ability to beat market as well in the long term. Third one, this one is an additional benefit available for tax saving. You can enjoy a tax benefit along with the insurance cover and investment growth in a tax saving scheme. So it is a double bonus from both sides, insurance coverage as well as investment. So let's discuss the details of this SIP insurance facility. The cost of an insurance cover will be completely borne by the AMC asset management company. The investor who fall under the age of 18 to 51 are eligible for the facility free of insurance. If generally we took the insurance, then we have to go through a detailed plan of a various illness if we have as far as our age is concerned. But here the insurance provided is free of cost because these charges will be borne by the AMC. Now let's consider what are the insurance plan available. So there are currently four AMC asset management company offering a plan. The first one is a Nippon India AMC. For the first year, the coverage is 10 times of a SIP. Second year, it's a 50 times, and third year onwards, it's 120 times. For PGIM AMC, first year 10 times, second year 75 times, third year and onwards 120 times. For SIB AFC, first year 10 times, second year 50 times, third year onwards 100 times. And the last AMC available, Axis AMC, first year they provide a zero assurance, but from second and onwards it is calculated based on a remaining SIP installment. If you want to get the detailed information, we have shared a link of our blog where we have discussed everything. Now let's come to the general point for selecting these policies. Also, we will have a little bit comparison between the policy offered by different AMC. Here, Axis and SIB AMC provide the insurance facility for their retirement scheme only, which has a lock-in period of 5 years or till retirement age, whichever is earlier. Insurance cover will be available for resident individual as well as NRI in case of a Nippon and SBI AMC, while Axis and PGIM AMC insurance facility is available only for residential individual. Only the first and sole unit holder will be covered under the insurance. Minimum SIP requirement is there based on a different AMC, which we will discuss further. In case of Axis, Nippon, PGIM and SBI AMC, all insurance will be continued till the investor completes at the age of 55. So 55 is the ceiling limit. Maximum insurance cover across all eligible scheme of AMC is a maximum 50 lakh per investor. So if an SIP is more than the two scheme from the same AMC, the combined insurance cover cannot exceed 50 lakh. Suppose if I covered under this insurance policy, the maximum ceiling limit is 50 lakh only. It doesn't matter if I taken a two SIPs or not. 50 lakh is a threshold limit in a blanket threshold way. Any additional purchase made in the folio with SIP insurance policy, the amount will not be be considered as an insurance. So as we discuss, SIP Insure is a specific product. So if I have an SIP with the same AMC, it will not consider. The amount for calculation of insurance will be solely based on SIP insurance product. If nominee is registered with investors amount, it will be considered for nomination. When there is a no nomination available, investor will be required to appoint a nominee first and then proceed to register for SIP. As you know, this product is basically an insurance linked product, so there has to be a nominee. In case of a death of an applicant, his or her legal representative or nominee will have a claim directly with the insurance company, supported by all the relevant documents as per the insurance, and the payment of claim will be made to the legal representative by insurance company. Here the AMC role is limited because all the legal procedure needs to be conducted with an insurance company where the AMC will help. The insurance cover will cease in following 4 cases. Number 1, upon attaining the maximum age criteria, that is 55. Second, at the end of SIP tenure, if you withdraw the SIP. Third, redemption, switching off through SIP systematic withdrawal plan of a units purchase under the scheme in which SIP insurance facility is available. And fourth, if investor default in SIP installment as per the conditions based on a different SIP. We just wanted to highlight over here that these are all basic general information and anyone can opt for this product based on their own risk appetite. Now let's discuss the policy offered by each AMC based on specifics of their policy. The first one is a Nippon India SIP insurance. Nippon India SIP insurance facility is an add-on feature of a life insurance cover under the group term insurance to individual investor opting for SIP in a design scheme. It helps to encourage individual investors to save and invest regularly through a systematic investment plan and help to achieve the financial objective without any adherence. Minimum SIP installments is monthly SIP rupees 500 per month or in multiple of 1 rupee after that, quarterly 1500 per quarter or multiples of 1 and thereafter, yearly SIP is 6000 per year and multiple of 1 thereafter. Minimum period of contribution is 3 years. Maximum period of contribution, no upper limit for SIP tenure. This investment can be a perpetual also. However, the insurance coverage will up to the age of 55 only. Mode of payment for SIP installment available all through debit card, credit card, post-dated checks, one-time bank mandate. Everything is possible. Exit load for a structure prevailing at the time of investment and registration of SIP in respective eligible scheme of a Nippon India SIP, and no insurance cover shall be admissible in respect of a death of a SIP insured unit holder on account of a suicide within 12 months from the date of a joining. So it's basically a denial code where the suicide will not be result in an insurance claim. The second AMC available with us is PGIM AMC. It is basically a mutual fund scheme that investor in other mutual funds, provided the strategy is to diversify the asset allocation by investing in underlying fund rather than directly investing in a stock, bond and other security. This allows investor an opportunity to invest in a variety of a company through a very high risk. This is basically the investment part of a SIP. Only the first and sole unit holder will cover under insurance of a smart SIP. Minimum SIP installment is monthly 1000 rupees. PGIM India long term equity fund 500 and multiples of 500. There is no upper limit. Minimum period of contribution again here 3 years, and maximum period for SIP installment, it can be a perpetual SIP, but the insurance cover up to the age of 55. Mode of payment any through electronic mode as mentioned. Third AMC available with us is SIB AMC. Third AMC available with us is SBI AMC. SBI retirement benefit is an open-ended retirement solution-oriented scheme where the investment amount is locked in for 5 years or until the retirement, that is completion of 65 years as per the current norms. No investor above the age of 65 will be allowed to subscribe for the scheme. SIP Retirement Benefit Fund is the only scheme by SIB Mutual Fund that provide a long-term retirement saving goal and that aims to investor to save the retirement health with the build purpose by investing in multiple classes of asset. The investor objective of the scheme is to provide a comprehensive retirement savings solution. The minimum initial investment required is 5,000 or multiple of a 1. Thereafter minimum additional is 1,000. The minimum redemption has to be made through of rupees 500 or 1 unit, whichever is lower. There is no exit load for the scheme. Further, no exit load is applicable in case of a switch from one plan to another. This scheme offers a 4 different investment plan: aggressive hybrid plan, conservative hybrid plan, and conservative plan. The investor can choose any of the scheme based on the risk appetite and his personal financial requirements. The fourth AMC available with us is Axis AMC. Residential individual investor and investor above the age of 18 but up to the age of 51 can make an SIP investments. Minimum tenure is 3 years and minimum SIP requirement 1,000 per installment. Insurance will be commenced upon the investment of a 12 successful SIP installment. The insurance cover will be limited to the extent of a residential installments of a SIP up to the age of a 55. Here the maximum ceiling limit for the insurance coverage is 50 lakh. Insurance cover lapse till the maturity of a 55 years is available, but after that the SIP can continue as an investment portion. Partial or full redemption or switch out of a unit purchase under Axis plan before the completion, the mandate SIP tenure and installment. So here we discuss all 4 plans available with the 4 AMC. Now let's conclude what is a bottom line. So yes, we can say that SIP Insure is one of the best hybrid product for free insurance link equity based monthly SIP. It maximizes insurance cover as well as is take part care of a investment portion. The maximum cover is 50 lakh sum assured, which is free of cost as no premium is paid. Selection of SIP in AMC should be an individual selection based on the risk appetite. So thank you for listening with us, and please, if you want to share anything, you can comment below. And the most important part, if you want to read the full article, the link is in the description. Thank you for joining with us.